Ladies and gentlemen, this is Amitabh Hajela from CII, your host. Welcome to the webinar that we are hosting today on service tax negative list and other recent changes. The webinar initiative of CII, we have found it to be quite well accepted and appreciated by our members, and we have organized 94 such online interactions since 2009. We have been informed that over 6,000 members have participated and given their feedback on these interactions on the net. Today's speaker, Mr. Abhishek Jain, is a partner at PMR. PMR is the knowledge partner for this webinar today. He is a lawyer by qualification and has an experience of more than 12 years in indirect taxation, during which he has extensively been involved in advising multinational and domestic companies across a wide range of sectors such as infrastructure, automobile, power, IT, FMCG, oil and gas, financial services, to name a few. He is a regular speaker at various industry forums, and he has published many articles to his credit. The live interaction session would begin after Mr. Abhishek Jain has completed his presentation. I just wanted to inform that the webinar would be a one-way process, a one-way communication from CII New Delhi to all the participants. Participants are also requested to type their questions in the question box, which would be open during the question and answer session, and Mr. Jain would take up these questions one at a time and would answer all the questions raised. May I, on behalf of participants and CII, extend a very warm welcome to Mr. Abhishek Jain and invite him to take over the session now. Thank you. Over to Mr. Abhishek Jain.
Good afternoon, ladies and gentlemen. First of all, I would like to thank CII for giving me this opportunity to interact with you all on the new service tax regime. In spite of all the apprehensions of whether the negative list regime will come into force, it has been effectively implemented from July 1. To my mind, it's a very good and a great step for ultimate introduction of GST. The comprehensive negative list regime is in line with the overall concept of GST. Now let me quickly I'll spend a couple of minutes on the current regime, and then for the next hour or 15 minutes we will spend discussing the new regime that has come into force. As all of you are aware, the current service tax is a tax on certain specified taxable services. Service tax till July 1, 2012 was not a tax on all services. It was only a tax on the specified taxable services in the Finance Act 1994. So generally, as a concept, what is service was never in debate. We only had to look whether an activity was qualifying under any of the specified listed taxable categories, and if yes, we had to pay tax. If no, then there was no service tax liability. Under the current regime now, effective July 1, 2012, all services become liable to service tax except a few exclusions, which we will discuss shortly. There is no classification of services required under the new regime now. Again, earlier import and export of services, the taxability of the same was determined under the import and export rules, which again was category based. Under the new regime, since we do not have category, of services. The import and export rules have been replaced by place of provision rules, and we have, for cross-border transaction in services, we have to examine the taxability of any service under these proposed under the place of provision rules. The new service tax regime, broadly, as we all like to call it, is a negative list regime, because all services except the services mentioned in the negative list or the exempt list are liable to service tax. The earlier abatements and exemptions have all been withdrawn, and they have been replaced with new exemptions and abatements effective July 1. Many of them are still continuing, but many of them have been iterated and have been modified, so we need to be careful as to whether our earlier exemptions and abatements continue, or the abatement percentage could be different under this current regime now. So this slide basically is a broad snapshot of what all the new regime of service tax is all about, and I'll touch upon these various aspects in the course of my presentation. So if you look at the left hand side, first is the charging section. So under this section, the charge of service tax comes from. Then there's a definition of service to figure out what all activities would qualify as a service and would be liable to service tax. The charging section specifically excludes services mentioned in the negative list, which would not be liable to service tax even after July 1, 2012. Then there is a list of exempt services, which is the exemption list. Certain services which are currently under litigation before the Supreme Court and High Court, the government, for abundant caution, has specifically included these services under the declared list, so that there is no confusion in the minds of the taxpayer or the authorities about the taxability of these specified services. Then, as I briefly discussed, any cross-border transaction of service would be liable to service tax only if it is provided in India. And when would a service be provided or deemed to be provided in India would need to be determined under the provisions of place of provision of service rules. So we'll go to that, and for various situations we will broadly see what are the criteria for examining whether the service is provided in the taxable territory of India or a service is provided outside the taxable territory and hence not liable to service tax. Then we'll also talk about interpretation of services. If it's a bouquet of services or if it is a bundle of services, how would the services be classified and what will be the taxability of bundled service. Then typically, as all of us know, service tax is the liability of the service provider. The service provider needs to pay the service tax to the government. In the past, there were few services on which, instead of the service provider, it was the service recipient who had to pay tax, which included import of services, goods transport services, sponsorship services. This list has been widened and many more services have been added to this list. So all service companies, even as service recipients and other manufacturing companies, will need to be careful, because even if you are not providing any service, you may still have a liability to pay tax, pay service tax under a reverse charge mechanism, for which you may need to take registration and file appropriate returns, etc. Then we'll briefly touch upon the new valuation rules, point of taxation and SERVICE credit rules. So keep this broad snapshot slide in your mind, and we'll keep coming back to the various concepts highlighted in this slide. So I'll start with the charging section. So I'll just read out for the benefit of all. It says, there shall be levied a tax hereinafter referred to as service tax at the rate of 12% on the value of all services. I'll just pause here. It says all services. Earlier the taxability was only on taxable specified services. As against that, now the service tax is on all services and the term service is defined. immediately after this slide we will go and see what all is included in the definition of service. So it's a tax on the value of all services other than those specified in the negative list. So services which are specified in the negative list are outside the tax net under the charging section itself, and we'll go to the negative list and figure out what all services fall under negative list and are hence not liable to service tax. Provided or agreed to be provided in the taxable territory. Taxable territory is defined to mean whole of India excluding the state of Jammu and Kashmir. So a service under the regime effective July 1 will be liable to tax only if it is provided in the taxable territory. And when would a service be deemed to be provided in the taxable territory will be determined by the place of provision rules. So a tax is on the value of all services other than those specified in the negative list, provided or agreed to be provided in the taxable territory by one person to another. So this is another criteria. A service qualifies as a service only if it is provided by one person to another. You cannot provide a service to yourself, and collected in such manner as may be prescribed. So in this definition of charging section, the various concepts which are important are the definition of service, the services mentioned in the negative list, and the service should be provided in the taxable territory, which would be determined as per the place of provision rules. Let's go through these concepts. First of all, let's look what all activities are included or excluded in the definition of service. So this is the definition of service. It says service means any activity. So it's as wide as it can be, any activity carried out by a person for another for consideration and includes a declared service. So service means any activity carried out by a person for another. Again, the same concept, you cannot provide a service to yourself. The service has to be provided by a person to another. There has to be a consideration and includes declared services. We look at the list of declared services. As I said before, declared services is the list where there is litigation on taxability of these services under the erstwhile regime, and the government as a measure of abundant precaution have clearly included these services under the ambit of service tax. And we'll go and see what is the definition or what is the meaning of the term activity. We will see what is the meaning of the term consideration and how wide are these terms, because these two terms will determine what all activities and what all for what all consideration such an activity will become liable to service tax. Then the exclusions. So the service, the term service does not include or shall not include. These are the exclusions from the definition of service itself. The first exclusion, it says an activity which constitutes merely, and the word merely is important, I'll come back to this term, merely a transfer of title in goods or immovable property. So any transaction which is merely a transaction of sale of goods or immovable property will not qualify as a service. But the word merely is important because if over and above sale of goods or sale of immovable property, along with that, if there is an additional service, for example, you're selling goods and you're installing the goods, then sale, it's not an activity merely of sale of goods, it is sale of goods plus installation. So your installation may still qualify as a service. Again, another example could be home delivery of foods. The home delivery part of it could still qualify as a service and could still be exposed to service tax. But a transaction pure and simple for sale of goods or sale of immovable property without any service in addition to that is excluded from the definition of service. The second exclusion is the deemed sales under the Constitution of India. This would include transactions like lease of goods. The third exclusion is a transaction in money or actionable claim. Again, merely a transaction in money will not be liable to service tax, but if along with transaction of money there is some element of service, that element of service may still be liable to service tax. To give you an example, if you have a 500 rupee note and you exchange it for 5 notes of 100 rupees, that's a clear transaction only in money and would not be liable to service tax. But if we slightly tweak this transaction, and for that conversion of 500 rupee note into 5 notes of 100 rupees, if the converter charges a conversion fee like what typically happens in conversion of foreign exchange, then that additional conversion charge that the converter has charged would become a service, because then the transaction is not merely a transaction in money. Similarly, would be a case for actionable claim. So for all these exclusions, if they are merely transaction in sale of goods, immovable property, deemed sales, transaction in money or actionable claim, it would be excluded from the definition and not liable to service tax. But if there are certain services attached to these transactions, that service element may still be liable to service tax. The fourth exclusion from the definition of service is a service provided by an employee to the employer. That is not a service. Fees taken by a court or tribunal is not a service. That's the fifth exclusion. So these are the 5 exclusions which are excluded from the definition of service itself. The other exclusions from liability to service tax will come in the negative list. Services specified in the negative list are not liable to service tax. Then the list of exempt services would not be liable to service tax, and these exclusions are not liable to service tax. So if you need to determine whether any activity that you are rendering or performing to another person for a consideration, whether it is liable to service tax or not, the first thing that we need to see is whether our activity qualifies under any of these 5 exclusions. If it does not, then we'll have to see whether that activity qualifies under the negative list and we could still be outside the net of service tax, or if the activity falls under the exempt list, we will not be liable to service tax. Other than these 3 broad exclusions, if your activity is for a consideration and it is not excluded under any of these 3 heads, it will be a transaction liable to service tax. Apart from these 5 exclusions, there is a explanation to the definition of service. There is an explanation to the definition of service which says, for the purposes of this chapter, an unincorporated association or body of persons, as the case may be, and a member thereof shall be treated as distinct persons. So we saw in the previous slide, for a service to be taxable or service to qualify as a service, it should be from one person to another. These 2 explanations, A and B, it is a departure from that norm that a service needs to be provided by one person to another. The first departure is that if it's an unincorporated association or body of persons, so 2 people come together or 2 entities come together and form a consortium which is not an incorporated entity and render services to a third party, then these 2 consortium members will be treated as separate from the consortium itself. Typically in these situations till today, we treated the consortium members and the consortium as one and the same, and there was no additional level of transaction between the consortium members and the consortium. What this explanation tries to suggest is that the consortium will be treated as separate and distinct from the consortium members, which means that there could be one layer of service from the consortium members to the consortium, and then from the consortium to the service recipient or the project owner. So this is one departure, that service cannot be provided to self. In this case, the rule that the government is saying is that service can be provided by the consortium members to the consortium itself. The second exclusion, that a service cannot be provided to self, is the explanation B. which says that any establishment of a legal entity in a taxable jurisdiction, say India, and a non-taxable jurisdiction, say in a foreign country, France, even though it is within the same legal entity, say a branch office in India and a head office in France, they will be treated as two separate legal entities, and any transaction between this branch office in India and say a head office in France will be treated as a service. So these are the two exclusions from the general concept that you cannot render a service to yourself. So as we saw, the important thing to keep in mind is that service means any activity carried out by a person for another for consideration. Let's see what is the meaning of the term activity and what is the meaning of the term consideration. The term activity is not defined in the Finance Act 2012. However, the education note circulated by the government along with the new regime of service tax has defined service tax to mean the word activity would include an act done, a work done, a deed done, an operation carried out, execution of an act, provision of a facility, etc. It is a term with very wide connotation. Activity could be active or passive and would also include forbearance to act. So this is very important. Not only a positive act of rendering a service, not doing something as an obligation to somebody else or refraining or tolerating something would also qualify as an activity, and if it is for a consideration, it will qualify as a service liable to service tax. Agreeing to the obligation to refrain from an act or to tolerate an act or a situation has also been specified as a declared service under section 66E of the Act. So the word activity is very wide, and every act by one person to another would fall under this act, this definition. So until that activity falls under the exclusion list, if there is an activity for a consideration, it would be liable to service tax. Now let's go and see what is the definition or meaning of the term consideration. Consideration is defined in section 67 explanation A. It means consideration includes any amount that is payable for the taxable service provided or to be provided. So it's an inclusive definition, and it clearly includes any amount that is paid in cash. But since it is an inclusive definition, other than consideration in cash or money form, any other consideration which could be in barter form or other than money form would also be consideration. And the guidance note clearly clarifies that. It says that consideration would not only include monetary consideration, it will include non-monetary consideration as well. And the examples of non-monetary consideration provided in the education guide are as under. If you are rendered a service and you are receiving supply of goods or services in return, the receiving of goods or services in return would be a consideration. Refraining or forbearing to do an act can also be a consideration. So if you have provided a service to somebody else and he has refrained from doing something which you have asked him to not to do, will also be a consideration. Tolerating an act or a situation can be a consideration. Doing or agreeing to do an act can also be a consideration. So any reciprocal set of promises for doing something or not doing something will qualify as a consideration and would be liable to service tax. The example that the education guide has given to explain this concept is: A agrees to dry clean B's clothes, B agrees to click A's photograph, a service transaction as per education guide. Because A is dry cleaning B's clothes, A is rendering service to B. B is agreeing to take A's photograph, B is rendering services to A. Both are rendering services to each other and both will have to pay service tax. So does it mean that any set of reciprocal promises qualify as a service transaction and be liable to service tax? What is the test of determining? Because in your daily lives, you may be rendering or doing many things for your friends, your family members, and they may be doing something in return for you. You may agree to give a lift to your friend till his home. He may agree to buy you the breakfast next day morning. Would they become services and be liable to service tax? May not be. And we can borrow some help on this regard under European Union VAT jurisprudence, where they say any set of reciprocal promise or activity by one person to another will be liable to tax only if there is a legally enforceable relationship. So many things which are done out of love and affection, which do not have any legally enforceable relationship on the two parties, would not be a transaction liable to service tax. So again, as I said, that if you maybe take your wife out for a movie, you are two distinct persons and the wife agrees to cook food for you. There is no underlying legally enforceable relationship. This is all done out of love and affection. Those kind of transactions would still not be liable to service tax. But many transactions, so a non-compete is a classic transaction where there is no consideration that is exchanged. So company A may agree to not enter into a particular business of say oil and gas. Company B may give a reciprocal promise of not getting into a business of say telecom. Each of them are refraining to do something under a legally enforceable relationship, and these two set of reciprocal promises, which is not out of love and affection but under a contract between two legal entities, would be liable to service tax. Yes, we will have valuation issues as to how to value these transactions because there is no money exchanged. Many of these transactions are not valued in the books of the companies, but that's a subsequent challenge. On the face of it, these transactions would be liable to service tax. So we have discussed the concept of what qualifies as a service. Let me quickly go. We saw in the definition of service that it includes declared services. Let's quickly go. What are the inclusions in the list of declared services? So as I said, the declared services is mostly a list where the concept of taxability of these transactions for service tax is a little grey or is under litigation before the various courts. Let's look at the first one, renting of immovable property. It is to be abundantly clear, the government has said that this is a declared service liable to service tax. Next one, construction of a complex building, civil structure or part thereof, including a complex of building intended for sale to a buyer, wholly or partly, except where the entire consideration is received after issuance of completion certificate. So if you book a flat and the developer constructs the flat as under the development agreement, that transaction would be liable to service tax under this entry. This again, if you would recollect, is under litigation. Punjab and Haryana High Court upheld the levy of service tax on these transactions. It is currently in appeal before the Supreme Court, because the debate that used to happen was that ultimately it is a transaction of sale of immovable property and it should not be liable to service tax. So to make it a transaction, it has been included in the declared list. The next one is temporary transfer or permitting the use or enjoyment of any intellectual property right. So intellectual property rights qualify as goods for VAT purposes, and temporary transfer amounts to lease of IPRs and is liable to VAT. Because of which there used to be a dispute whether the state government can levy VAT as well as the central government can levy service tax on this transaction. And again, to make it abundantly clear and avoid litigation, the central government has included this in the declared list of services. The next one is for software. This has again been a gray area in the past. So this list says development, design, programming, customization, adaptation, upgradation, enhancement, implementation of information technology software will qualify as a service and be liable to service tax. The silver lining is that earlier at times even sale of software used to get exposed to service tax. Maybe with effect from July 1, we can say sale of software is sale of goods and is excluded from the definition of service. We saw the definition of service excludes transactions of sale of goods, and maybe the software industry has something to cheer about. And with effect from 1st July, any transaction which qualifies as sale of software, we can take a stand that it should not be liable to service tax. Next one is agreeing to the obligation to refrain from an act or to tolerate an act or a situation or to do an act. Again, they are clarifying that any positive act as well as something passive, as if you agreeing not to do something or refraining from doing something, would also be a transaction liable to service tax. The next one is transfer of goods by way of hiring, leasing, licensing, or in any such manner without transfer of right to use such goods. This will broadly involve transactions of supply of tangible goods without transfer of right to such goods. Next one is activities in relation to delivery of goods or hire purchase or any system of payment by installments. We saw the definition of service excludes deemed sales transactions. One of the deemed sales transactions is hire purchase and sale of goods on payment by installments. These transactions, the basic transaction of lease or sale of goods on payment by installments, would not be liable to service tax. But the financing aspect in these transactions, as all of you know, in a hire purchase transaction, there is a lease component and a financing component. The financing component of transactions of hire purchase and sale of goods on system of payment by installments would qualify as a declared service and be liable to service tax. And the government has issued an exemption notification for a hire purchase transaction. Your interest component, only 10% of that, and any processing charges of those transactions would be liable to service tax. Remaining, if all the consideration for a hire purchase is considered towards lease of goods, which is liable to VAT and would not be liable to service tax. Next is very important, service portion in the execution of a works contract. Works contract are transactions where there is both sale of goods and provision of services involved. This line item clarifies that the service portion of works contract would be a declared service and be liable to service tax. So the goods portion of works contract would be excluded from the definition of service, but the service portion in the execution of works contract would be a declared service and would be liable to service tax. The next one is catering. Again, catering includes both provision of goods or sale of goods and services. The provision of goods would not be liable to service tax, but the service element in the catering contract would be liable to service tax. So this is the list of declared service. As we saw in the charging section, there is a negative list of services which are not liable to service tax. This is the negative list of services. Let's go through this list. So if your activity is for a consideration but it falls under any of these specified line items, that transaction is excluded from the levy of service tax. Sorry. The first exclusion from the levy of service tax or inclusion in the negative list is services by government or a local authority, excluding the following services to the extent they are not covered elsewhere. So services provided by the government are in the negative list. However, the 4 specified services, they are an exclusion from the negative list, and even if they are provided by a government or a local authority, would be liable to service tax. So to explain these 4 services, 1, 2, 3, 4, even if provided by government or local authority, these are exclusions from the negative list and would be liable to service tax. Any service other than these 4 provided by a government or local authority is covered in the negative list and would not be liable to service tax. So the first exclusion from the negative list of a service provided by the government is services by the government of posts or by way of speed post, express parcel post, life insurance and agency services provided to a person other than government. So this service of Department of Post, even if provided by the government, would be liable to service tax. Next is service in relation to an aircraft or a vessel inside or outside the precincts of a port or an airport. Again, this services in relation to an aircraft or vessel, even if provided by the government, would be liable to service tax. Transport of goods or passengers, again, even if provided by a government, would be liable to service tax. The next one is important. Support services provided to business entities. So support services provided by the government to business entities would be liable to service tax. And let's look at the definition of support services. Support service is defined to mean as infrastructural, operational, administrative, logistics, marketing or any other support of any kind comprising functions that entities carry out in ordinary course of operations themselves but may obtain as services by outsourcing from others or any reason whatsoever, and shall include advertisement and promotion, construction or works contract, renting of movable or immovable property, security, testing and analysis. So all these services, support services, even if provided by the government or local authority, would be liable to service tax because this is excluded from the ambit of negative list. Largely the concept that the government has followed is that any service provided by the government which is in the sovereign domain of the government would not be liable to service tax. For example, a telecom license or a mining license which only the government as a sovereign can provide to customers or service recipients. There is no private player which provides similar services. Such transactions or services provided by the government would not be liable to service tax. But any service, say of renting of immovable property, maybe telecom services provided by BSNL and MTNL, in these kind of services, there are private players that compete with the government. For in the telecom space, there are so many telecom players, Bharti, Vodafone, and hence for these services, which are not sovereign functions of the government, these services provided by the government would be liable to service tax to create or maintain a level playing field between the government and private players. But any service which is the sovereign function of the government would not be liable to service tax. The next line item for in the negative list of services by the Reserve Bank of India, they will not be liable to service tax. Services by a foreign diplomatic mission located in India would again not be liable to service tax. Services relating to agriculture would not be liable to service tax, and they have specifically listed all those activities in relation to agriculture. Trading of goods would not be liable to service tax. Any process amounting to manufacture or production of goods, it is an activity liable to excise duty and hence would not be liable to service tax. This is next one is a curious one. Selling of space or time slots for advertisements other than advertisements broadcast by radio or television. So selling of space or time slots for advertisement would not be liable to service tax, and only selling of space on radio and television would be liable to service tax. So if you are selling space on billboards, hoardings, websites, cabs, those transactions would be covered under the negative list and would not be liable to service tax. This is a curious one because currently those advertisements in billboards, websites are liable to service tax. The only exclusion is for print media for obvious reasons. But in the regime effective 1st of July, even selling of space on websites, hoardings, etc. would not be liable to service tax. Services by way of access to a road, I mean these are toll charges that you pay on toll roads, that would not be liable to service tax. It's a state subject, liable to state taxes. Again, betting, gambling or lottery, these are all state subjects, liable to state taxes. This would not be liable to service tax. Admission to entertainment events or access to amusement facilities, these are transactions liable to entertainment tax collected by the state governments, and to avoid duplicity of tax, they have been excluded from the levy of service tax. The next inclusion in the negative list is transmission or distribution of electricity by an electricity transmission or distribution utility. Services by way of preschool education, education as part of a curriculum. So these education services would not be liable to service tax. Services by way of renting of residential dwelling for use as residence. So we saw in the declared list, renting of immovable property is liable to service tax, but that will only be commercial renting. If you have given out a premises on rent for dwelling purposes for use as a residence, that would not be liable to service tax. The next exclusion again is an important one. Services by way of extending deposits, loans or advances, insofar as the consideration is represented by way of interest or discount. So any deposits made by corporates, banks, individuals, the service fee or the returns in terms of interest or by way of discount would not be liable to service tax. Interstate sale or purchase of foreign currency amongst banks or authorized dealers of foreign exchange would not be liable to service tax. But any foreign exchange conversion transaction between an individual and a broker, and as I had articulated earlier, since it's not merely a transaction in money, there is a service fee or a brokering for conversion of that money. That brokering, the consideration for that brokering would be liable to service tax. Service of transportation of passengers with or without accompanied belongings, following would not be liable to service tax, which is by a state carriage, railways in a class other than first class or an air-conditioned coach. So travel by railways would not be liable to service tax except if the travel is in a first class or an air-conditioned coach. So travel by in railways in first class or air-conditioned coach is not in the negative list and is liable to service tax. However, the government has separately come out with an exemption notification exempting these services for a period of 3 months. But as and when that exemption is withdrawn, this is not in the negative list and hence would become liable to service tax. Travel by metro, monorail or tramway is included in the negative list. This would not be liable to service tax. Again, transportation by inland waterways, public transport other than predominantly for tourism purposes, this would not be liable to service tax. Again, metered cabs, radio taxis or auto rickshaws, travel by these three would not be liable to service tax, and this is different from renting a cab where you don't hire a cab or a radio taxi on the street. You engage contractually rent a cab agency which supplies rent cabs to a company. Those transactions for rent a cab companies would still be liable to service tax. The only exclusion is for metered cabs, radio taxis or auto rickshaws. Services by way of transportation of goods by road would not be liable to service tax, but the exclusion from this is transportation of goods by a goods transportation agency, which would typically include the trucks, and transport of goods by a courier agency. These two kinds of transportation are excluded from the negative list and would be liable to service tax. The next exclusion is by an aircraft transportation of goods by an aircraft or a vessel from a place outside India to the first customs station of landing, this would not be liable to service tax. Again, transportation of goods by inland waterways is excluded. The last one is curious, good one. Funeral, burial, crematorium or mortuary services, including transportation of deceased, would not be liable to service tax. Hence, all of us can die in peace. Okay, so this is the list of negative services. So the first exclusion from the ambit of tax is what we saw was the exclusions in the definition of services itself, which were the 5 exclusions: sale of goods and immovable property, deemed sales transactions, transaction in money or actionable claim, employer-employee relationship, and fees paid to court or tribunals. That was the first set of exclusion. The services specified in the negative list is the second set of exclusion from the ambit of service tax. The third set of exclusion is the negative, is the exempt services. The government has separately come out with several exemption notifications, and the kind of services mentioned in these exemption notifications would be exempt from the payment of service tax. So I have not captured all the services. Broadly, we have captured the important services. So healthcare services by clinical establishment, authorized medical practitioner or paramedics would not be liable to service tax. Services by way of technical testing or analysis would not be liable to service tax. Services provided to the government, a local authority or a governmental authority by way of construction, erection, commissioning, installation, completion, fitting out, repair, maintenance, renovation or alteration of a civil structure or any other original works meant predominantly for use other than for commerce, industry or any other business or profession would be exempt. The two important conditions here are that services should be provided to the government, a local authority or a governmental authority, and it should be a civil structure or original works, and it should be for non-commercial purposes. So the entry says other than for commerce, industry or any other business or profession. The second is any services rendered to government for construction, erection of a historical monument, archaeological site, etc. Again, any service for construction of a structure meant predominantly for use for educational, clinical or any art or cultural establishment. Any construction, renovation of dam, canal or irrigation works done for the government. Again, any construction, etc. of pipeline, conduit or plant for drinking water supply, water treatment, sewerage treatment or disposal. Any construction of a residential complex predominantly meant for use by the employees of the government. So all these services provided to the government or local authority would not be liable to service tax. The next exemption is of services, these kind of services provided to anybody, be it government or non-government. It says services provided by way of construction, erection, commissioning, installation, completion, fitting out, repair, maintenance, renovation or alteration of road, bridge, tunnel or terminal for road transportation for use by general public. So this entry is different from the first one, where it need not be a service provided to the government, but it should be a road, bridge, etc. for use by general public. So these services, even if not provided to the government, would be exempt from service tax. So the civil structure for Jawaharlal Nehru Urban Mission Scheme or Ravitji Vikas Yojana, construction for building owned by entity registered under 12 AA of Income Tax Act, which is meant predominantly for religious use. Pollution control or effluent treatment plant except located as part of the factory. So if the pollution control or effluent treatment plant is within the factory, it will not be exempt, but if it is outside the factory, then it would be exempt. A structure meant for funeral, burial or cremation. So all these activities of construction would again be exempt from service tax. The next exemption is services by way of construction, erection, commissioning or installation of original works. Now again, this entry is different from the earlier two. We saw under the earlier two entries not only original construction, but even fit out, repair, maintenance, renovation or alteration was exempt from service tax, but in entry 14 only the original construction is exempt from service tax. So repair work or renovation of airport, port, railways would be liable to service tax, but if it is original construction of airport, port or railways, it would be exempt from service tax. Similarly, original construction of a single residential unit, low cost houses would be exempt from service tax. And original works is defined to mean all new constructions, all type of additions and alterations to abandoned or damaged structure on land, erection, commissioning or installation of plant machinery, equipment or structure, whether prefabricated or otherwise. So under entry 14, what we have to keep in mind is that only original construction would be exempt from service tax, not any renovation, repair, etc. The next exemption is for temporary transfer of copyrights relating to original literary, dramatic, musical, artistic or cinematographic films. The next one is important. Subcontractor providing services by way of works contract to another contractor providing works contract services which are exempt. So we saw that there are certain services, construction services, only if they are provided to the government under entry 12 would they be exempt. So from a subcontractor to the main contractor for the government, the services provided by the subcontractor would not get covered under the earlier entry and would not be exempt. But we can take help of this separate exemption which says that if the main contractor is providing works contract services which are exempt, then even the services provided by the subcontractor to the main contractor would qualify for exemption. But the condition is that both the services provided by the subcontractor to the main contractor and the main contractor to the project owner should be works contract services. If the services do not qualify as works contract, and works contract is defined to mean any contract for construction etc. where there is both sale of goods and provision of service. So if the subcontractor is providing say only consulting engineering services to the main contractor, consulting engineering will not qualify as a works contract and would not be entitled to this exemption. The next service says services received from a provider of service located in a non-taxable territory. So if the service provider is located outside of India and the service provider provides services to a government or an individual and those services are used other than for commerce, industry or any other business or profession, that service would not be liable to service tax. Again, if the service is provided to an entity registered under section 12A for providing charitable activities, or if the service provider is located in a non-taxable territory and provides services to another person located in a non-taxable territory, that would not be liable to service tax. The example of this 34C would be, say, an American aircraft comes to India and there is some repair work that needs to be done, for which engineers from Japan flew to India and carry out that repair. Even though the service is provided in India, since both the service provider, which is the Japanese company, and the service receiver, which is the US company, both are located outside India, it will qualify for an exemption and would not be liable to service tax. The next one is very important. It says services by way of transfer of a going concern as a whole or an independent part thereof. So this exemption was not there in the original list of exemptions, and people were worried that business transfer agreements, generally called slump sale, would those transactions all become liable to service tax, because a slump sale or a transfer of business can qualify as an activity for a consideration. Thankfully, the government in the revised list for exemptions have specifically put this as an exemption. So any slump sale or transfer of business, even though it's an activity for a consideration, would be exempt from service tax. Though because it's an exempt activity, it may trigger reversal of input credits. So we have covered the charging section, which says it's a tax on all services. Let me just go back and recap the entire scheme. So we saw the charging section, which says that service tax, there shall be levied a tax at the rate of 12% on the value of all services. We have seen what all are included and excluded from the definition of service. other than those services specified in the negative list. We have seen the list of services in the negative list which would not be liable to service tax. Provided or agreed to be provided in the taxable territory. So to determine whether a service is provided in the taxable territory, which is India except Jammu and Kashmir, we will now look at the place of provision rules. So place of provision rules will replace the earlier export and import rules, and any cross-border transaction between India and outside of India, and even between India and Jammu and Kashmir, because Jammu and Kashmir is again excluded from the taxable territory, whether that transaction would be liable to service tax or not, we will have to go to place of provision rules and determine where is the place of provision. If the place of provision is in India, that transaction would be liable to service tax. If the place of provision is outside India, the transaction will not be liable to service tax. So the scheme of place of provision rules is, rule 3 is the general rule, which says that the place of provision of service as a default would be the location of the service receiver, which means that if an Indian entity is providing services to a foreign entity, the place of provision would be the location of the foreign entity. It is outside the taxable territory and would not be liable to service tax. Vice versa, if a service is provided by a non-resident to a resident in India, the place of provision would be the location of the Indian resident, which is India. Since the service is provided within India, the place of provision is in the taxable territory and would be liable to service tax. This is the default rule, but there are several exceptions to this default rule. And if I go back to the last rule, which is rule 14, it says order of application of rules. So if there is a conflict between two rules, or a particular activity or a service is capable of falling under two rules, then the later rule will supersede the earlier rule. So we'll have to see the later rule and determine the place of provision as per the later rule and ignore the earlier rule. So the general rule is the location of the service receiver, but this general rule would apply only if the transaction or the service does not qualify under any of the other rules. Because if the service qualifies under any of the other rules, those rules being later or subsequent to this rule 3 will override this general rule. So first exception to the general rule, which states that location of the place of provision of the service is location of the service receiver, is services in relation to goods. And I'll just read this out. Service provided in respect of goods that are required to be made physically available by service receiver to the service provider to provide the service. The example of these services are many. This could be cargo handling services, where the service provider will hand over the goods to the service provider to render the services. This could be goods transport services, where again the service recipient would hand over the goods to the service provider. This could be repair and maintenance. So all these kind of service in relation to goods, where the service recipient hands over the goods to the service provider, the place of provision of the service will be the location where the service is performed. So if the service of cargo handling is provided in India, then the place of provision would be the taxable territory of India, and that service would be liable to service tax. If, say, the cargo handling agency is providing services outside of India, say in US, the place of provision would be US, which is outside the taxable territory and would not be liable to service tax. So this is the general rule. Then again there are provisos to this general rule 4. First proviso says, provided when such services are provided from a remote location by way of electronic means, the place of provision of service would be the location where the goods are situated at the time of provision of service. So for example, if there is a software located in US that needs to be repaired, and the engineer sitting in India go online and repair that software in US, the place of provision of that service would be US, and since that place is outside the taxable territory, this transaction would not be liable to service tax. Uh, then again, this rule also covers transactions where service can be provided only in physical presence of an individual. This could be healthcare services, this could be beauty treatment services, this could be training services where the individual recipient of services needs to be physically present, and for these services the location of services where the service is actually performed. The next rule is in relation to immovable property. Any service which is directly provided in relation to immovable property, the place of provision of service is where immovable property is located. If immovable property is located in India, it would be taxable. If immovable property is located outside India, these kind of services would not be taxable. Any service in relation to an event, the place of provision would be location of an event. Again, say World Cup cricket is happening in India, that event is India, any service in relation to that event would be liable to service tax. But if the same World Cup, instead of being in India, is outside of India, say in South Africa, the place of provision would be outside India and would not be liable to service tax. The next rule says that irrespective of what is written in Rule 456 earlier, if for services falling under Rule 456, even if part of that service is provided in the taxable territory of India, the entire service would be deemed to be provided in the taxable territory. So to give you an example, if a service in relation to cargo handling is provided in India as well as say Bangladesh, the entire, since part of the service is performed in India, the entire service would be deemed to be provided in the taxable territory of India and would be taxable. The next rule is again an exception to the earlier rules. It says that any service which is provided by a resident to a resident, the place of provision of service would be location of the service provider. So to give you an example, say an Indian company appoints another Indian company B to design a villa or a hotel in US. Now as per Rule 5, since the hotel is located in US, the place of provision should be US and it should not be liable to tax in India. But since Rule 8 says that the service provider, which is company B, and service recipient, which is company A, both are located in India, the place of provision would be the location of the service receiver, which is India, and not the location of the immovable property as per Rule 5. So clearly we see that this service of company A providing design services to company B for a hotel, there is a conflict and this service falls under both Rule 5 and Rule 8. But since Rule 8 is a later rule, it will supersede Rule 5 and the location of the service would be location of the service receiver and would be liable to service tax. The next rule says services such as specified banking, online database, intermediary services, hiring of means of transport up to 1 month. The place of provision of these services would be the location of the service provider. So I will only touch upon intermediary services. This is very important. And intermediary services is defined to mean a broker, a agent, or any other person by whatever name called, who arranges or facilitates a provision of a service, hereinafter called the main service, between two or more persons, but does not include a person who provides the main services on his own account. So intermediary is basically, and to just give an example, suppose there is an Indian company which is helping a US company sell software services into India. This Indian company is acting as a facilitator. It is helping the US company sell services into India. It will qualify as an intermediary. And as per this rule, for intermediary services, the location or place of provision of services, location of the service provider. The service provider was the Indian company. It was located in India, and hence the place of provision of these intermediary services become India and would become liable to service tax. So this is a great departure from the earlier regime where these kind of services used to qualify as export. So intermediary services only covers where services where the Indian company helps the foreign company sell services into India. If this Indian company is helping the foreign company sell goods into India, then it does not qualify as intermediary services. and then the default rule would apply, which means the place of provision of services would be the location of the service recipient, which is outside India and would not be liable to service tax. But intermediary services for helping our principal sell services to a customer in India would qualify as intermediary services, and since the place of provision is the location of the service provider, these services would become liable to service tax. So this was, I'm skipping the other rules as the other ones are not that important. So any cross-border transaction, we will need to see whether the provision of service as per place of supply is in India. If the place of provision of service is India, the transaction would be liable to service tax. If the place of provision of service is outside India, the transaction would not be liable to service tax. Then this another section is on rules of interpretation. So this typically would come in handy if you are providing a bundle of services or bouquet of services. As per place of provision of service, the taxability of bundle of service or bouquet of services would depend on whether the services are naturally bundled. If the services are naturally bundled, then for example, a hotel stay along with the complimentary breakfast, these are services which are naturally bundled. We'll have to see what is the dominant nature of that service. In the example of hotel and morning breakfast, it is hotel services, and whatever are the tax implications for hotel services will be the implication for both the bundled services together. But there could be services which are not naturally bundled. So for example, one property which has a first floor and a second floor. First floor is given on rent for residential purposes and the second floor is given on rent for commercial purposes. Now the rent for commercial purposes is liable to service tax. Rent for residential purposes is not liable to service tax. But these are two transactions which have been artificially bundled, and hence, and there is no dominant nature of this service. For these kind of services, the provision says that the worst tax treatment will be given for these services. So even though residential services are exempt and commercial are taxable, if they have been bundled together and there is one consideration for these two services, both would become liable to service tax. Just want to make an announcement that we will take the Q&A at 4:30. So I'll take another 15-20 minutes to finish this presentation and then we will take up the Q&A. So we'll need to be careful of, in relation to bundled services, what is the dominant nature of bundled services. Another example of bundled service could be if a contractor is constructing a port for a project owner or for the government. That construction services various elements. It could be designing the port, it could be transport of material, it could be construction, but the essence of the contract is construction of a port. And since construction of a port for a government is an exempt transaction, all these services of designing of the port, transport of goods and construction will be exempt from service tax. But if any part of this activity is subcontracted by the main contractor to a subcontractor, suppose the main contractor does not do the consulting engineering or feasibility study for that port and engages a separate consulting engineer for carrying out a feasibility study, those consulting engineering services may not be exempt because the exemption is only for construction of a port and not any feasibility study. So we'll have to see what is the bundled service. In the hands of the main contractor, the bundled service is construction, which is exempt. But in the hands of the subcontractor, if it is consulting engineering, which is not liable, which is not an exempt service, that transaction would continue to be liable to service tax. So this was the entire scheme of taxability under the new regime. The next one is more, it's a compliance and a pain point for most companies under the new regime effective from 1st of July, which is a domestic reverse charge. So all these transactions, even if the receiving entity is not a service provider, it may have to pay service tax on all these services on a reverse charge basis. Some of these services were covered under reverse charge earlier also, but the government has expanded the list, which is a big pain point for most of the companies, because each company has to track all these services provided by these category of service providers, and if both these conditions are satisfied, then the companies have to pay service tax as a recipient of service and has to take registration, file returns, and do the other necessary compliances. So services by an insurance agent to insurance companies, the service tax has to be paid by insurance companies. This was earlier also there. Again, goods transport agencies, there is a reverse charge of 100% in the hands of the person receiving these services. This was also there earlier. Sponsorship services, again 100% reverse charge. The next one is the new one. Any services received from an arbitral tribunal, would the person receiving the services would have to pay service tax on a reverse charge basis, not by the arbitrator or the arbitral tribunal. Again, support services received by the government except renting and transport of goods. Instead of the government, the company which is receiving these services would have to pay service tax 100% on a reverse charge basis. Again, any service received from advocates and law firms, the company which is receiving services has to pay service tax and not the law firm or lawyer. Again, if a company hires a vehicle which is typically called rent-a-cab from a rent-a-cab agency which is an individual HUF firm AOP, the company receiving the services has to pay service tax 100% on a reverse charge basis. Again, if you're receiving services of supply of manpower from individual HUF firm AOP, the service recipient has to pay service tax, not entirely, only to the extent of 75%, and 25% has to be paid by the service provider. Again, works contract services received from individual HUF firms AOPs, 50% tax has to be paid by the recipient of service and 50% tax has to be paid by the service provider. The next one was always there, any service which is import of service from a service provider located outside India or now even in Jammu Kashmir, the service recipient in India has to pay service tax 100% on a reverse charge basis. So this is a big compliance issue. All companies will need to keep track of all these services received from these entities and discharge the service tax liability as a service recipient. I will quickly touch upon the valuation rules in the context of works contract. The earlier scheme of composition where the effective rate of service tax was 4.8% has been rescinded, but along with that the government has come out with abatements. If it is original works, the abatement is to the extent of 40%, where again the rate works out to 4.8%. But if it is not original works, in case of works contract for maintenance, repair, reconditioning or restoration or servicing of goods, the abatement is only 30% and tax has to be paid on 70% of the value. In case of other works contracts, the abatement is to the extent of 40% and tax has to be paid on 60% of the value. So the earlier, instead of the composition scheme where the rate was 4.8%, all companies will need to analyze what is the nature of works contract, and depending on the classification, tax may need to be paid on 40, 70 or 60% of the value. The other option other than abatement is if you have, for a works contract, if you have a split between value of goods and services, then on the value of services you can pay the rate service tax at the rate of 12.36%. If you don't have the split, then on the gross value of goods and services, after taking the abatement which we discuss in the next slide, depending on what is the classification of a works contract, you can pay service tax on 40%, 70% or 60% of the gross value. Again, coming to point of taxation, in case of works contract, if it qualifies as an original works and you have to pay tax on 40%, then the effective rate comes out to 4.8%, which was earlier also the rate under composition scheme, and hence under point of taxation, the rule that would apply is the general rule, which is rule 3. But in case of other works contract where the abatement is only 30% or 40%, the rate of service tax will go up from 4.8 to 7.20%. In this case, since there is a rate change, the point of taxation, and especially for transaction services, which are services say provided in the months of May, June, and which get carry forward in the month of July, August also, the rate of tax and other tax positions will have to be determined under Rule 4. And I'll quickly go to Rule 4, which broadly says that between three events, which is provision of service, raising invoice, and receipt of payment, if two out of these three activities happen on or after July 1, then the effective scheme, the new scheme of after July 1 has to be taken into account. If two out of these three events have happened on or before June 30th, then the tax regime prevalent as on the erstwhile tax regime needs to be factored. For new services, say for residential complex of residential units of more than one unit, which was not taxable earlier, this has now become taxable. Rule 5 needs to be seen, where broadly the concept is that if invoice and payment has happened before July 1, 2012, then it would not be taxable under the new regime. Just a few minutes on the SENVAT credit scheme. One is cosmetic changes, because the earlier SENVAT credit rules were linked to the different taxable categories of services. Now under the new regime, since there are no categories, all those provisions have been realigned to match with the new regime of service tax. Exported service would not qualify as exempt services, and hence if you are exporting services, then you can get input credits and you can also take refund of your input credits. Our service will qualify as export if following conditions are satisfied. The condition number 1 is that provider of service should be located in the taxable territory, which is India. The recipient of service should be located outside India. The service should not be a service specified in the negative list. The place of provision of service as per the place of provision rules should be outside India. The payment should be received in foreign exchange, and the service transaction should not be between a head office and branch office of one legal entity located in two separate jurisdictions. So if all these conditions are satisfied, then a service will qualify as export of services. And not only on export of services there is an output service tax liability, but any services procured for rendering these services, input credits would be available and can be claimed as refund. Next clarification or amendment in the SENVAT credit rules for abundant precaution is that if an entity has to pay service tax on a reverse charge basis, that entity cannot utilize credit for payment of service tax on a reverse charge. Reverse charge will have to be paid in cash. Credit cannot be utilized for payment of service tax on a reverse charge basis. The next one is that if services are rendered to SEZ units or developers, no tax needs to be paid and you can still avail your input credits, and this is a retrospective amendment from 2006 onwards. The next one is in case a company A is providing services to company B and there is a reverse charge on that service, the tax would be paid by company B on reverse charge. But company A may have procured certain input services on which there is an input credit. Since company A does not have any output liability, it would not be able to utilize these input credits, and this new provision says that in such scenarios company A can claim a rebate or refund of input credits because it does not have an output liability. The output tax is paid by the recipient of services on a reverse charge basis. So this is again a welcome amendment under the SENVAT credit rules. So this is broadly it from my side. As a summary, what qualifies as service is any activity for a consideration provided by one person for another qualifies as a service. Certain declared services are specifically included as to qualify as services. What is excluded from the definition of service is sale of goods or immovable property or deemed sales, transactions in money or actionable claim, services by employees to employers. These do not qualify as services. Also, what activities would not be liable to service tax would be activities included in the negative list or services which are specifically exempted. Any activity which qualifies as a service, if it is a cross-border transaction, then it will be taxable only if place of provision as per the PPS rules is in India. If all these conditions are met, then an activity would be liable to service tax. However, if it is excluded, or if it is in the negative list, or if it is in the exempt list, or if place of provision as per the PPS rules is outside of India, then a transaction or an activity would not be liable to service tax. As a way forward, I think each entity or company needs to comprehensively evaluate the taxability or non-taxability of all its expense line items. The expense line items could be domestic or foreign. They will also need to see that if these expense line items are not taxable, good. If they're taxable, what next needs to be seen is whether there could be a reverse charge liability on these services that the companies are procuring. Again, taxability, non-taxability of all revenue line items would need to be examined, whether they are taxable, whether it qualifies as a service, whether it falls under the negative list or exempt list, if it is a service provided to a foreign entity for which foreign exchange is coming, whether it qualifies export of services. So both on the expense side and revenue side, a comprehensive evaluation of all activities needs to be done by all companies. Again, especially for cross-border transactions, whether a service would be liable to service tax, import of services, or for foreign exchange earnings, it would not be liable to service tax. Export of service would need to be re-examined under the place of provision of service rules, because the earlier import and export rules have been rescinded. And again, companies may need to relook at transactions in or within J&K, because again, transactions in J&K or with entities in J&K would be determined by the PPS rules and not under the earlier law. All the exemptions, abatements have been reiterated and modified and tinkered, and again a sanity check needs to be done whether the earlier exemptions or abatements continue or they have been modified. Then there could be transactions which are bundled and composite. For those transactions, the dominant nature of services and taxability would need to be determined as per the provision for interpretation rules. Again, situations for reverse charge applicability, where the company, even though they are not providing any service, but may be liable to service tax on services received, may need to be done. As I said, that this is a big compliance pain for most companies, and may need IT system changes so that companies can adequately track these transactions and discharge the service tax implications. Again, credit eligibility for new taxable services should be undertaken. If any of these need or necessitate any amendment in contracts, that again is something that companies should evaluate. So that's all from my side. I would be happy to take any queries that all of you have.
Thank you, ladies and gentlemen, for your patience. Speak. Yeah. Thank you, ladies and gentlemen, for your patience in allowing Abhishek Jain to go through his presentation. I am reminded of a university professor who would come and give a long lecture of an hour, hour and a half, and at the end of it, he would not be saying any questions, but he would say, "Are you sufficiently confused?" So this is an opportunity where the members can write in their questions, and we would request Abhishek Jain to respond.
Yeah. And this is visible to all, right? Okay. So first question is from Harish from TPDDL. His question is whether our question is what will be the treatment for service provided by employer to employee? Is service tax payable on deduction when employee leaves the company on short notice? So the exclusion from the definition of service is any service provided by the employee to the employer or employer to the employee in the course of employment. If this deduction is in the course of employment, then and as per the terms of employment, then this would not be liable to service tax. But if it is not during the course of employment or as per terms of employment, then it may be exposed to service tax. So what is important is whether it is in the course of employment or not in the course of employment. Okay. Which entity is to get registered? Any turnover based limitation? Yes, there is a small scale exemption up to a limit of 10 lakh, but that is applicable only if the tax liability is as a service provider. If you have to pay service tax as a service receiver on a reverse charge basis, then this limit of 10 lakh does not apply, and from rupee 1 you become liable to pay service tax. The clarification sought are when there is no classification of services as provided earlier, how does the service recipient identify under which category is the service provider providing his service? So you do not have to go to the classification or the taxable category. For reverse charge payments, the services have been specifically listed. So legal services provided by a lawyer or a law firm, if that is the nature of service, then you have to pay service tax on a reverse charge basis. Again, if the service is of sponsorship, then you have to pay service tax on a reverse charge basis. So again, if a service is of works contract received from individuals, works contract is defined. If that is the nature of service, service tax needs to be paid on a reverse charge basis. So though the services are not so articulately defined as under the earlier regime, but for reverse charge basis, they have specifically clarified what are the services or nature of services on which service tax will need to be paid on a reverse charge basis. Next question is, under notification 24/2012, the government has prescribed the method of computation of tax liability for works contract. Does the service provider has an option to choose the percentage basis instead of showing his VAT returns? So as I said, there are two options. If you have the split between the value of goods and services, then service tax can be paid on the value of services at the full rate of 12.36%. If you don't have the split, then on the gross value, you can take the abatement and pay service tax at the rate of 12.36% on the abated value. Next is, please clarify whether the sitting fees paid to a non-executive director of the company are subject to service tax. So, a non-executive director, if he does not qualify as an employee of the company, which I think he would not, then whatever fees is being paid to the director would be liable to pay service tax on such fee if the fee is more than 10 lakh rupees per annum. Can CHA service be defined as works contract? No, CHA service is not works contract. Works contract is typically construction related services where there is both sale of goods and provision of service. CA services neither is construction nor is there any sale of goods. What is the limit for the reverse charge? There is no limit for reverse charge. Reverse charge liability starts from ₹1. Only for service provider, if the liability of payment of service tax is on the service provider, the SSI limit of 10 lakh per annum applies. Where annual fee is paid for renewal of license for packaged software which has been subject to VAT, whether liable to service tax also? Yes, this could be liable to service tax because if this license fee does not qualify as sale of software and you have already paid a sum for sale of software, this is a fee paid additionally for using the software for an additional period of time. This could be exposed to service tax. If an ex-employee of a company works with it after his retirement on retainer basis under contract and performs his duties and getting an amount more than 10 lakh, would it fall under the service or not? Yes, if after retirement the employee works on a retainer basis, this would be a service. If his remuneration is more than 10 lakh rupees, this would be liable to service tax. An administration transfer charge in case of construction company. Transfer charge, yes, that could be liable to service tax because as it is, if the construction company is selling flats pre the completion certificate, the entire construction is liable to service tax. If it is post completion, then it will be a transfer for sale of immovable property. But if the construction company still charges a transfer fee, that is a transaction of fee over and above the transaction for sale of immovable property, and that could be liable to service tax. How to determine degree of performance under fixed establishment? I'm not clear of this question. Where the online database access service received from a non-taxable territory by a recipient in taxable territory, is it exempt? No, this is not exempt, but under the place of provision rules, online database services provided by a non-resident to a resident, the place of provision of service is the location of the service provider, which would be the location, the state of resident of that service provider. If that is outside India, this would not be liable to service tax under the place of provision rules. What is difference between negative and exempt list? Yes, very good question. There is a very nuanced difference. The list of negative services is there in the statute. It can be amended only by the parliament, while as exempt list is by a notification issued by the central government, which is an executive function and can be amended or tinkered or withdrawn by the central government without the approval of the parliament. That is one difference. The other difference is exempt list. You have an option not to claim the exemption and pay service tax if the situation demands and you want to pass on the credits by not claiming an exemption. But for negative list, since under the charging section, that is a transaction not liable to service tax, you do not have an option to not pay. You do not have an option to pay service tax. You cannot pay service tax Okay.
Yeah, thank you.
Should we continue? Sorry about this technical snap. We lost 5 minutes, but nevertheless, we'll continue. Uh, okay. What is the impact on cross charges on inbound secondment of employees from a parent entity? On secondment, there will be a service tax, and the entity in India would have to pay service tax on a reverse charge basis. If an employee is not sent abroad, if an employee is sent abroad on a long-term basis, paid salaries abroad, will his service be taxable in the hands of his Indian employer? Well, if he continues to be an employee of the Indian entity and you have not transferred the employment from India to the offshore company, yes, the services are taxable, but this under the place of provision of services, the location of the service recipient is outside India, and hence the service would be deemed to be provided outside India, and hence would not be taxable, and may also qualify as export if you satisfy the other conditions for export of services. Many of these things are not questions, actually I'm getting lost.
Just start from
So I'll start with Poonam Nivya. If services received from outside India towards IT services pertaining to SAP consultancy, do we need to service tax under reverse charge mechanism? Will depend on the nature of IT services. Most likely they should fall under Rule 3, in which case you will have to pay service tax on a reverse charge basis. Neeraj, reverse charge in case an employee of head office parent company provides legal services to its subsidiary or branch office, will this be liable to service tax? Yes, this will be liable to service tax. Navneet, mutual fund distribution companies exempt from service tax from July 1, 2012. Whether the service tax liability is payable if payment is made in July for services rendered in June. So as per point of taxation, we'll have to see if the point of taxation is July, then the law applicable in July would apply. If as per point of taxation it is June, then we'll have to still go by the earlier law. Sriram, whether service tax credit can be availed on job work charges when the finished product is exempt from excise duty? No, if your finished product is exempt from excise duty, then the manufacturer of these exempt excisable products will not be able to avail credit of input services. In which condition service tax will not be applicable? Service tax will not be applicable if the activity falls under the exclusions in the definition of service, or if the activity is specified in the negative list, or if the activity is specified under the exemptions, or if it is a cross-border transaction, the place of provision of services outside India. These are the only 4 exclusions. If the activity does not come out under any of these 4, then it would be liable to service tax. In which condition service would technology AMC qualify under works contract? Well, if that AMC involves both sale of goods and provision of services, it would qualify as works contract. And against the earlier law, where for AMC contracts there was no abatement prescribed, the new law prescribes an abatement of 30% or 40%, depending on whether the AMC is for goods or immovable property. If the service is provided from India, built on the foreign company, is it eligible for export or service under new law? Well, 2-3 things need to be seen. One, whether your service is under the place of provision rules if the service is provided outside India. Then if you are receiving payment in foreign exchange, if the service recipient is located outside India, service should not be in the negative list. If these 3-4 conditions are satisfied, then your services will qualify as export of services. whether service tax is attracted for the receipt of commission in foreign currency from foreign principal towards the service provided in India. So this is intermediary services. If the foreign principal is providing services in India and the Indian company is helping the foreign company sell services, these services may qualify as intermediary services for which the place of provision of services in India, and hence it may not qualify as export and may be liable to service tax. Whether service tax is attracted for the receipt of. Next is by Vikas. Suppose the service provider charges 100% service tax on the service chargeable under reverse charge mechanism, then what will be the liability of the service receiver? So under the reverse charge liability for service tax, it is not an option between the service provider and the service recipient as to who has to pay service tax. Wherever the liability of service tax has to be discharged by the service recipient under reverse charge, it has to be paid by the service recipient. The service provider cannot pay service tax on these services. So it's not an option under law that between the service provider or the recipient, anybody can pay tax. Generally, the service provider has to pay tax, and in case the reverse charge applicability triggers, then it has to be the service recipient who has to pay the tax. So technically, even for reverse charge, the service provider may have paid 100% service tax. Technically, the service receiver would still have a liability to pay service tax on those services, and service provider may go and claim a refund of service tax paid by the service provider. Navneet, amount paid to CHA located outside India, whether we should be liable for payment of service tax? Yes, this service would qualify under Rule 3. Location of provision of service would be India, and the Indian company will have to pay service tax on a reverse charge basis. Srinivas, Bharat Biotech. Now onwards, all the services should be paid only one head or separately. No, there is no classification or separate accounting codes for payment of service tax. All services would be classified as services, and the government has already come out with the accounting code. There will only be one accounting code under which service tax would need to be paid. Srihari, Lanco Infratech question. This is related to determination of point of taxation in case of change in rate of tax. In case of a construction contract where the contractor received mobilization advance from customer, this is a very lengthy question. We can take it separately offline. Prashant Kamath, in case of an AMC, there is one element of service as well as supply of spares. Hence, all AMCs will amount to works contract. Yes. So in AMCs, as you have rightly said, there is both supply of goods and services. So all AMCs, until unless they are AMCs only for provision of services, would qualify as works contract. What is the validity of notification 17 of 2011 and application 17 of 2011 was a notification providing exemption for services rendered to special economic zones. That has been replaced by a new notification, I think 40/2012, and any services provided to SEZs, the exemption would have to be claimed under 40/2012, provided we satisfy the conditions enumerated under 40/2012. In your PPT, it was shown that the recipient hiring of motor vehicles would be paying 100% service tax. So if you are hiring motor vehicles from a firm, individual, AOP, then there is a reverse charge and you have to pay reverse charge as a service recipient. We are MNC located in India and our server is located in USA. Software are developed in-house in USA and loaded in the server in USA. The cost of software is charged to all countries in sales ratio. Is service tax applicable? So basically you are using the software facility of the offshore company. This should be liable to service tax under Rule 3 until and unless because the software company in US does not need to hand over the goods to you, this should be liable to service tax on a reverse charge basis. Whether aviation training program provided by academy registered with DGCA are taxable under new service tax regime or qualifies under the negative list, and whether it is required to get registered and commercial coaching and tuition. So until unless this service qualifies under the negative list or exemption for education services, this would be liable to service tax. If money is received from outside India, can export of services be claimed or any other way to save tax? If money is received from outside India, one condition for export of service is satisfied, but there are other multiple conditions. The service should be deemed to be provided outside India as per place of provision rules. The service recipient should be located outside India. The service should not be a negative list service. If these other conditions are also satisfied, then it will qualify as export of services. However, if it does not qualify as export, but under the place of provision rules, the service still provided outside India, then it will not be liable to service tax, though it may not qualify as an export of service. Contractor is providing works contract services to project owner, but contractor only subcontract services and not works contract. Would contractor be exempt? No, the subcontractor in this case will not be exempt from service tax, because the exemption for subcontractor is available only if subcontractor also provides works contract services. So I'll only take 2-3 more questions, as I think we are running out of the scheduled time. I just have 4-5 minutes more. I will just take few more questions and then we will close the webinar. Notification 40 of 2012 provides for obtaining list of services from the approval committee. Post July 1, list of services do not exist. So for this approval will not be on the basis of the taxable services specified earlier. This approval will now be basis the nature of services. So it could be for construction service, consulting engineering. It will be on the nature of service, not the earlier taxable category of services. If anyone is still sending us the invoice at 10%, do we have to pay balance 2% service tax? No. If there is no reverse charge, then as a service recipient, you do not have to pay the balance. The balance, if at all, has to be paid by the service provider. Whether service is provided by Indian subsidiary to foreign holding company will be subject to service tax. Well, we'll have to see under the place of provision rules. If the service is provided in India as per the PPS